You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now, that's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
Hello, everybody. Welcome back to another live stream. We're back in the studio for another week of markets. And just a heads up, I was watching, of course, the little pre-roll that we did for FX2 there. Just a heads up, actually right now, if you use our code A1Trading15, they have a Cyber Monday deal that is 50% off any of their evaluations. If you are somebody who is looking to get funded, you can get up to 200,000 in simulated trading capital with FX2. And again, if you use our code A1Trading15, it does knock off 50% of the price. That is a special, very short-term offer. The link for that, by the way, we just had Chandler drop it in the chat for us. You can click it here if you'd like to get that offer. Again, get funded with them. They're available, and the promo code there will help you out. So with that said, welcome back, everybody. It's been a few days since we've done a live stream. Of course, we had Thanksgiving break here in the United States, so we are just getting back to business here and feeling well rested. I think that seemed to be the team morale here at A1. We were all kind of well rested. A lot of driving during the holiday season. But overall, a nice break from the usual, and kind of back in the saddle, if you will, as we get ready for the end of the year, which does have some interesting tendencies. So we'll be covering all of that. I want to talk about the dollar, and starting out here with the dollar index as the markets get going here. You can see things continue to trend lower overall on the dollar index. Taking a look at the 4-hour chart, you can see we're in this downward channel, and each time price tries to retest the top of this zone, it seems to be met with pretty heavy sell pressure. So in my opinion, the path of least resistance for the dollar for the remainder of 2023 is to the downside. Now, you may get pops in the intermediate period. You may see price even retest this 104 level, but in my personal opinion, any rally on the dollar is likely to be sold by, institutional money, big money seems to be kind of changing the tide. And now, why do I say that? Well, from a fundamental perspective, we've seen some shifts. We've seen the economy in the United States kind of coming off of its really massive growth period, which I think is helping the Fed to be like, okay, that is likely to continue to cool inflation. And that cooling inflation may lead to rates being held at where they currently are, not likely to go up higher for now. And potentially even going into the new year, we may start to see conversation about rate cuts. And that scenario, all of those, if that is kind of does come to roost, it is likely that the dollar index continues to go lower. You have to ask yourself whether you're a purely technical trader, fundamental trader. Again, I think this is where sometimes purely technical traders can get themselves into trouble. You might say, well, it's oversold, it's pulling back, you have longer term support for an uptrend, but be very careful thinking that way, because the entire narrative, the secular trend in markets, seems to have really pivoted in terms of Fed monetary policy. And that's not something that usually just pulls back and just shoots up again. Now, we did see a little bit of that earlier this year, so let me be careful in that, right? We saw the market get really dovish on, or think that the Fed got really dovish when in fact they had inflation still stubbornly high and they had to raise rates further. And so that shot the dollar higher. So could that potentially happen? Sure. I think that the most foolish thing in markets that you could possibly do is be certain about where you think prices are going to go. That is the dumbest thing you can do. And anybody who has certainties or speaks with so much matter of factness in their analysis in the markets, run away from them, because nobody knows with certainty what the markets are going to do. Now, as we speak about the dollar index, let's face what we've got here this week. We've got momentum here overall to the downside. And as I mentioned, a rally in the dollar could actually be an opportunity, in my opinion, to possibly get short and to look for continuations. That's what I'm looking to do. Of course, do what you want to do. I'm not here to give you financial advice, as always. I'm just sharing my opinions. But I want to take that with us as we go over to take a look at gold. Now, of course, a lot of traders in the audience here are gold traders, right? A lot of people watching gold. Can we get a quick gold train in the chat? If you're somebody who trades gold, type gold train in the chat. You guys know who you are. You guys are crazy. I'm just putting a chat right now. So yes. Does Nick respond to the chat, or am I wasting my time? I do respond to the chat, just not very frequently, to be completely honest. It's very hard to get through a presentation and also read the chat. I'm going to be completely honest. I do try and keep up with it. And a lot of times I watch it back later and see what people say. But yeah, missed the live streams. It's good to be back. Glad to be back with you guys. We've got a great list of shows here for you this week. So make sure to subscribe if you're new. Okay. So yeah, the gold train is in the building. Good to see you guys. Choo choo. All right, let's do it. So gold, in reference to what I just said about the dollar, I think that the dollar remains weak for the rest of the year. And if I am right about that idea, I would then likely expect gold to see some appreciation. And I'm looking at the 4-hour chart, but we can actually get a little closer in here and talk about this 1-hour chart that, in my opinion, looks pretty interesting right now. So let's narrow in on this. And we're looking again at a 1-hour chart. We've had a nice pop to the upside. On Sunday, we actually saw gold and silver prices. Silver actually did more than gold. Look at this. Silver rocketing higher here. And gold, of course, kind of in the same boat. Big push and a break through this level of resistance. If you watched my video on Sunday, I talked about this level being a pretty key area. And it's cool to see that we actually got the breakout. So what I think could be interesting here is now looking at this and saying, if you start to get that pullback into this supportive area, is that a possible continuation play? And I think that, here's one thing I should say. We had a lot of questions about the COT reports coming out this week. I know a lot of you guys who use the EDGEFINDER, a lot of you guys watch weekly what the COT report has to show us in terms of what institutional money is buying and selling. And if you're somebody who's been wondering, hey, why hasn't it been updated since November 17th? Just a heads up, when you have US holidays, we added this link. If you're ever curious, if you have the EDGEFINDER, just click this link. It will take you to the COT's scheduling and why sometimes there are some delays and people do get confused by that. So please remember that when you have a US holiday, the COT report usually gets delayed by a day or two. So you can always check on that. We've added this link for you guys as convenience for those of you who use the EDGEFINDER to track institutional money. Okay, so we'll get new data, I think in probably the next day or so. I could be off by that. I will, again, have to check that myself, but I believe it's the next day or so. In terms of COT, on an overall basis, we still have USD still kind of bullish. Gold, however, still hanging in there, very bullish. And I think that this could be, a nice foundation to gold. However, the latest filing for gold was not so great, right? You saw actually some selling on gold on the institutional level. And so I'm pausing, I'm cautious on the gold longs until we get the new COT data. I'm very curious to see what that COT data comes out to be. And we will get that updated here in the Edge Finder whenever it's automatic. So the software will automatically pull the new data. And again, it checks every 12 hours. So we should get that new data in the Edge Finder ASAP for you guys in for those of you who do have a copy. All right. So speaking of getting a copy, while I'm on the subject, today's Cyber Monday. Let's do something crazy. For this stream only, we'll get you guys 50% off. If you want the Edge Finder, 50% off. We've been doing 45, but just for Cyber Monday special, check this out. We got a cool offer for you. Thank you to our viewers. There's 222 of you, so this is kind of a secret Cyber Monday sale that we're doing. Here you go, guys. Click the link. It's here. Send us a direct message. We'll get you 50% off if you message us Cyber Monday, okay? So if you message Cyber Monday, and Chandler and James, if you guys would let the reps know that if they send in the word Cyber Monday, we'll honor that offer and get them 50% off. If you guys message in, like I said, click this link. If you've been wanting this software, if you've been thinking about it, today is the 50% Cyber Monday offer that we've got going on. So click this link, click chat now, and if you click this one, the Black Friday offers, we'll just extend this to Cyber Monday and we'll do 50% off for Cyber Monday. Just click that, start a chat, and type the word Cyber Monday, and a person from our staff will hook you up with the biggest discount of the year. Take advantage of it. So there you go. Happy Cyber Monday, everybody. And it's the perfect day to get software, right? Cyber Monday, it makes sense. So we'll do that for you guys. Message in and we'll get you hooked up with a copy for a great, great discount. Yeah, gold's still running hot. I think that it stays supported if we do see a price pullback. But like I mentioned, I will be watching for the COT data that comes out later today, guys. So I'm very curious to see. Remember, this data is kind of old. So when we're looking at the COT, always, for users of the Edge Finder, we added this toolbar, and I think this is very useful. We now have the last updated time right at the top of your screen, so you know how recent this data truly is. So when you are using the Edge Finder, if you're using the COT report data, head over here and just make sure that you check and see when the last update was. So the updates are weekly because the COT report only gets published weekly. So we're waiting here today for that new data. So if you want that data when it comes out, shoot us a DM. Again, click the link in the chat and in the description, chat with us. If you send us the word Cyber Monday, we will give you the biggest discount of the entire year before it ends for the year. That is coming to a close here. It is your last chance to get a copy of the Edge Finder for the best price of the year. All right, so let's keep talking about stuff. I mean, in terms of markets, the S&P also same basis, same base case. If that Fed continues to kind of retreat back into the shadows in terms of being this terrifying market monster that it has been for the last few years, if it continues to kind of retreat and no longer be such a negative pressure on the markets, meaning of course rate hikes and if talks of potential rate cuts come into the picture, this market, in my opinion, is going to keep running hot. And by the way, I do have my stop trailed. I'll show you guys my actual position. S&P 500 still long. This is going on 27 days that I've been in this trade. And it is, in fact, a trade. I mean, I've just been holding this thing, and every time it breaks through the highs, I've been trailing stops a little bit tighter. And I haven't done so much as recently just because volatility slowed down tremendously during the Thanksgiving break there. However, as we get into this week, I do expect volatility to kind of pick up a little bit. We still have a few weeks here where volatility is expected to be a little bit higher. And so, for me, I stay long S&P as long as we hold this level. This is the 4,500 level on SPX 500. For those of you guys who are curious, of course, talking about this area here, that 4,500 level. As long as we hold above that, I stay bullish on the S&P, hopefully for the remainder of the year. If I can get 60 days holding this trade, that would be crazy. It is very unlikely to happen, but it could. And if it does, it would be a trade for the ages, for at least for my personal trading journey. But let's keep talking about other markets here in reference to that dollar that we discussed. The euro, guys, making a nice continued push. And if you notice, this is following the trend of the S&P 500 right now. They're moving together. And that is because the fall of the dollar is bringing on some risk on sentiment and helping out currency pairs like pound USD, which is rocketing higher. And, of course, pretty much anything against the dollar has seen a little bit of pressure. Has been doing well against the dollar in recent times. So when you take a look, for example, like I said, go back to this euro dollar for a second, you've got this nice series of higher highs, higher lows. You've got strength in this market. And I think that, until something changes, the path of least resistance for the euro and for this dollar downtrend is for it to persist, for it to continue. I think the end of the year seasonally is a really good time for risk on assets. Now, this is not a perfect predictor by any means, but if you take a look at euro in the month of December, it is historically a positive month against the US dollar. If you take a look, for example, at the S&P 500, which has performed very well in relation to seasonality, if I can find it, there it is. So you take a look at the S&P 500, look at this, beautifully predicted by seasonality. Now, I say predicted lightly. This was, of course, there's always the possibility that it breaks the trend of seasonality, but this year especially, this chart has kept me in some of my best trades of the year. I've followed seasonality very closely on the S&P, and look at this. We'll go through the months really quick, and then we're going to have Frank and Ivan join me on the call to go through some more setups. So look at this. January is pretty much kind of a mix. February is correct in its idea. March, it was mixed. But then you look at what kind of starts happening. Bullish prediction, correct. 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 Bearish prediction, correct. Bearish prediction, correct. Bullish prediction, correct. Seasonally, this has been a year that has basically followed suit with what seasonality was predicting. So it's been very interesting. If that trend is set to continue, we should expect, now, of course, markets are not this predictable all the time. So there is the possibility that we see a negative December. But if it follows the trend that it's been doing this year, we should expect to see bullishness in December in the fourth quarter, especially at the last year of a presidential term. That is historically a very strong time for the S&P as well. That is why I keep talking about it over and over. It is the trade for me this part of the year. Sure, I could be looking at currencies. I do have some currency trades. I believe I'm still in pound CAD, by the way. I need to trail that stop. Let me see. Yeah, I am still in pound CAD. I am in pound CAD also for the same risk on tendencies, right? That pound doing quite well and the oil market kind of crumbling, right? That's why I'm kind of by proxy short on the CAD through this, right? I'm long pound, short CAD. That is, of course, how a currency pair works. So I'm still hanging on to that trade. We'll see. This one's just been a runner too. So it's been a good time for risk on assets. And I continue to hold on to that idea. I'm not taking profits. I'm not, cutting the trade short. I'm letting things run right now. And I think that that's the way to do it. So any trades that we take, if you guys are not already inside of the VIP group, like I mentioned, we are doing our Cyber Monday sale. So click the link in the chat right now. We'll drop that one more time if you don't mind, Chandler. Cyber Monday. Send us that message. We'll give you 50% off any product that you want. If you want access to our VIP signals, if you want access to our EDGEFINDER for the COT data and our top setups algorithm, all of that is 50% off if you send us the word Cyber Monday. Guys, real quick, we're going to thank our sponsor, and then we're going to come back and speak with Frank and Ivan to see what they have to say about this current market environment. We'll be joined with them in just a second, right after this. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free Edge Finder, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
All right, guys, and we are back with Frank and Ivan. What's up, guys?
Hey, how's it going?
Nothing much, and you?
Good. Ivan, you don't, I imagine you don't celebrate Thanksgiving, but I think it should be a world holiday. It's an excuse to eat and drink with your family. What's wrong with that, you know?
Send me a turkey and I've seen some of the turkey videos on TikTok lately that I know how to make turkey now. It's amazing how much
Ivan,
turkey
you are always welcome at our table to come have Thanksgiving anytime you want. You bring the turkey, we'll have a great time. Maybe next year. So guys, of course, Thanksgiving made markets kind of quiet for a few days there, but it does seem like we have this window from like now until mid-December where markets are still kind of live before they die off for Christmas time. Ivan, I guess I'll start with you. What do you think about all this dollar move? Do you think it continues? Do you think what pairs are you watching?
Oh, this is a great time because when did we talk about dollar weakness? Did we talk about the dollar weakness the day 14th of November or something? And I've been dollar weak ever since. So I don't know, when did I get in? Yeah, so I'm still in it, and I'm still buying euro dollar around 108.40 or something in that direction. But yeah. Still, I think it's going to continue. My only question is this week, the end of the month, kind of short-term volatility. Are we going to go ahead the big drop and then go higher, or are we just going to go directly continue higher? So that's going to be the question.
Yeah, it is. And you know, in terms of catalysts this week, I'm just flipping through the calendar. You have consumer confidence tomorrow. You have let's see, nothing really on Wednesday. Then you have core PCE on Thursday. But I think, you know, one thing to add about core PCE right now is that we've already had recent readings on CPI and PPI, which showed some cooling. So I don't necessarily think that could be a huge market mover, but maybe we'll go to Frank with the fundamentals. Frank, any catalysts that you think are on the horizon, or is it just kind of a runway to see markets continue going for a little while? I mean, we don't have a big FOMC meeting hanging on the corner. So it's like, what do we look at next?
I think it's really just going to be the PCE. Hopefully it comes in what we're expecting. You know, other than that, I'm not sure how impactful PCE will be in terms of, you know, the other metrics we've seen from CPI and core like that. But I think if it's showing that general route of decline overall in all the inflationary metrics, and that'll be a good sign. And on top of that, it's the expectations of lower inflation and kind of the end of rate hikes is definitely impacting what's going on in the market. Like if you look at gold, that is already pricing in a lot of anticipation of that end to that trajectory. I mean, price retested those highs and actually broke above, but still hovering around the 2011s, 2010s, just kind of in a really good recovery on the gold market, which what we were looking at earlier was that that head and shoulders pattern that came down to support. Very, very good technical setups on gold. Right now, I think it's about just watching price action for the next few days, watching what PCE comes in at. And if we get a higher number, that's probably not going to be too great for price. But if we can either watch for a breakout above here on the daily time frame above the 2011 mark, I think that's a good sign. We could look at this to support, or we could see a pullback coming down to the 1990s, which would be kind of a big move for gold.
Hmm.
So that there are just some places I'm looking at gold, but other than that, the markets right now are very mixed, and earnings season is still rolling out, so it's nothing too exciting. But I think gold right now is the one to be looking at, and you can see here that over the past couple months have just been huge spikes in buy volume, and so this cluster kind of suggests, that we're gonna likely see more upside in the future. And yeah, that's kind of it right now. I'm looking at gold, but markets not so much. I'm still holding the S&P trade, but I'm not really. I'm very hesitant to continue buying on that front.
Fair enough. And Ivan, back to you on the currency side. So obviously gold an interesting one to watch, and I'm with you too on that, Frank. That breakout looks really interesting to watch closer. Ivan, you've got dollar yen pulled up. What are you
Yeah.
so what's the change? Because I think you were bullish yen crosses, and now are you kind of getting bearish on specific ones?
I'm glad you asked. Yes. So, no, it's just it's what I do every year, Nick. End of after Thanksgiving, yen pairs
Mhm.
tends to fall. So it's like more like a short term thing, more like opportunistic tactical. Because I believe yen pairs are going to go back up in December, anyways. So yes, I did short. Was it USD yen on Friday or Thursday? So I was a bit of a drawdown, but it has helped. So it is with expected yen strength and the expected dollar weakness that I took that trade. Not the best trade in the world, not the best entry in the world, but it goes.
Yeah, and that's the thing with entries is sometimes people get so caught up in trying to catch the perfect entry. It's almost like, if you just accept that it's okay to stop out quick and look for a re-entry. But in this case, you took minimal drawdown and now you're in a nice position there. So I think dollar yen in from a technical perspective, I think if you look at the daily chart, you've got something really interesting happening, which is that at 150 level, we talked about it. Well, 151 really. This high, we talked about this for a long time on the streams, just being this rock solid upward trend. And with this failure, with this double top, and now kind of confirming by breaking underneath all this structure, I think that this easy trade momentum that was for the dollar yen is definitely going to have a little bit of a tougher time now with all the dollar weakness that seems to be into the market. And at the same time, of course, at any point, Bank of Japan intervention stuff could still come into the picture. I don't hate it. I actually kind of agree. I like your potential short there on dollar yen. It's had a massive run up, and that to me is not by itself a reason to short something. However, if you have some seasonality there and you also do have signs of momentum breaking down, like I think we do, could be an interesting trade and probably some good risk to reward there. So, any other yen pairs, Ivan?
Well, this Aussie yen is not in my real account. This is my demo account. But this was or would have been a very good one. But what I'm looking for tomorrow is euro yen to come back up to 163, give or take, for like a short little retest. And then going lower. So euro yen is the one that is the weakest today. I did trade pound yen here, so that is basically just starting out. That was a mistake because I sold the low. So I'm the first one to say I made a mistake. But I was planning for tomorrow anyways. So okay, cool. I have that at least. And then yeah, though, so euro yen is kind of my top candidate for tomorrow. That's what I wanted to say.
Okay. Fair enough. And while you're on the screen, Ivan, what do you think about gold?
Okay, breathe. Okay, breathe. Okay. Did I expect this one to go higher? I don't know. I flip biases faster than I can flip my T-shirt. But definitely in the direction it should go in soon. It's a bit early, more like December. So yeah. Other than that, well, no, yeah, okay. but for me, like, this looks beautiful. Technical analysis without having made any predictions and say, oh, I was right. I was never right on this one. But to me, it's bullish, and for me, it can go up forever. In this case, until February.
Yep, fair enough. I always like to think when it comes to gold, they definitely print more dollars, but mining gold is a lot harder than printing paper. So over time, gold inevitably kind of goes up as more fiat currency gets printed. But that, of course, is a long-term kind of effect, similar to stock indices. They do go up over time, but there can be some very tumultuous times in between. But I do think gold, I think Frank and I are on the same page. That level of resistance kind of being broken, and watching for a daily close here on gold above this level could be really interesting. And I think it's due for more move to the upside. We've had there's a couple reasons here, and we discussed this. Our commentary, Ivan, I think you even saw that video. I saw your comment on that video. We discussed this, and that clip got put up on YouTube. Chandler put that up for us over the weekend. And we were discussing this idea that, like, if any concerns about recession do come into the picture, do rise, gold will fly, because in a deflationary environment, gold actually historically tends to do very, very well. And that is because, of course, people are anticipating that if deflation were to even become a concept, that the money printers would go back on, because that's the last thing that the Federal Reserve, that scared the heck out of them in 2008. They don't want that to happen. So gold will probably watch and say, well, they're about to print some money, and that's going to cause gold to fly. So it's markets are very forward looking in that regard. So it'll be interesting to see that combined with what seems to be the end of rate hikes. I think gold has plenty of upside, and I'll be looking personally for opportunities to get involved on pullbacks, similar to how Frank illustrated. So will be interesting to see from there. Frank, is there anything other than gold that you're watching? Anything on the currency side?
I'm just watching the dollar.
Okay.
I guess what I'm looking at is, weaker dollar. These tests on the trend line, they're kind of dwindling. They showed like a completion of the channel's trend, but then the past two attempts, they haven't been able to do anything. So every time it hits, establishes a lower low, comes in, hits a lower high, and then moves lower. So I think the general trend of the dollar is down. And it's going to keep going that way. And that I agree with Ivan on short UJ. So I think overall, lower dollar means looking at things like EU and GU to the long side, gold to the long side, and markets, stock markets to the upside as well. We just have to give it some time for all this sort of news to go through. I also have a question though, because I know we're looking at you're presenting the idea of a deflationary environment, but is that something that's like a concern right now, or is it something that could happen? I would maybe like next year or the year after, where inflation comes in too much lower than what we anticipated, and the economy is slower and things like that. Is that like a big concern, or are we? Because I feel like we still we're hoping for a lower inflation rate for the next year, and we want to keep it at 2 or under 2. But at what point do you think we're at a deflationary environment, and that's what's going to prop gold up higher?
Yeah, that's a really good question, and I'm glad you mentioned that, because I do want to, I guess, clarify. Like, you're totally right that the deflationary concern is not it's by no means like in the immediate future, because I think, like, for now, the market is still saying, hey, a slowing economy and slowing jobs growth is actually good in terms of getting that inflation thing under control, and we're still not we're not even close to the deflationary concept just yet. So I think that for now, until the end of the year, that's where I think you still just have a nice Goldilocks zone, a sweet spot to see risk on assets, as we kind of all are pointing to, like a weaker dollar, currencies that have gone against the dollar for a while to have been beaten up by the dollar, to see some appreciation, to see gold and stocks to potentially have more upside. So to that point, I think that for now, totally not really like front and center. The other thing I was mentioning is that if that economic growth like continues to slow, like if you see a period like going into next year where it keeps slowing and then it gets to where we wanted it to be and then it keeps slowing further, that could be, that could be 8 months away. So it's definitely, to your point, it's not like an immediate concern. It's just the question of, did all this rate hiking stuff that went on, is that going to have delayed effects to swing us all the way to the other side? And in that situation where a recession becomes possible, that's where I think gold could potentially rally as people kind of lose faith in the Fed. Now, I'm not saying that that's what I think is going to happen. I just think that part of the gold updrift would be the possibility of that happening, rising, is enough to get the price to go up. Not necessarily saying that's what I think is going to happen, but the possibility and the concern about it could cause a spike in gold's price. But it's very theoretical and long term. But to your point, right now it's not an issue. And I think as traders, let's wait to really pay close attention to that topic into the future. So I think that's a good way of I guess pointing that out, Frank. Thanks for saying that. Ivan, what do you think? Do you think recession is, obviously, last time I had you on here when Frank, you and I were speaking about this, you had a really good answer that I think was the best way from a trader's perspective to answer it, was like, just be data dependent like the Fed, because we don't know if a recession is coming. Is that still kind of accurate for like how you would approach the end of the year and going into 2024?
Thank you for reminding me what I've said previously, because I can remember half of what I've said. But yeah.
Well, it resonated with me that well, Ivan. You
Yeah.
spoke it so well. I remembered it.
Okay. Yeah, let me have a serious answer. Yeah. But the other thing is, when it comes to fear. Okay, so let's say we expect recession next year. What market would you see? You wouldn't see a dollar going higher. You wouldn't see S&P 500 going higher. You wouldn't see things going higher if we expect a recession, if we expect doomsday and everything is going to crash. What the market is currently expecting, the current situation is, we are on hold. We're waiting to see, but we're waiting to see that Fed is going to peak, because a lot of expectations has not been priced in that this is the end. So if Fed comes out 13th of December and saying, hey, we are still going to increase everything is going to change. Everything is going to change. So until then, I would argue that the market's still very optimistic, or optimistic in a sense that we are going to have a lower rates next year. We are going to have falling inflation, but it's not going to be doomsday preppers.
I think it's a great time to be a trader, because if you're an investor right now, to Frank pointing out that idea that inflation seems to be looking good for now, as a trader, we have this awesome opportunity to trade what's in front of us. We don't have to think about like 6 months, 12 months. If you're an investor right now, it's probably a lot harder, in my opinion, if you're looking at, do I want to, get long indices and gold, and what do I want to do with the dollar? But as a trader, it's like momentum's going for us right now. There seems to be not a huge number of catalysts that could completely kill this idea for now. Fingers crossed, knock on wood, that doesn't come right after I say it. But there's nothing like obvious. There's no massive jobs number that everyone's looking at. There's no Fed speak that everyone's too super terrified. It just seems like right now there's this window for traders to trade. And I think that that's, at least for me, how I'm going to play the rest of the year. And we'll see how that one plays out. But I guess we'll wrap it up there. And Ivan and Frank, thank you both for joining me on the call. I feel like we had another good discussion there, as we always typically do. So Ivan, thank you very much for coming on. And before you go, let me also just say, for people who don't know Ivan and Frank, and you probably know some of us, but we also we run the Discord channel together. So if you guys are not already in the Discord community, check it out. So you can see all of our trades being shared. We have Ivan, Frank, and myself. We're sharing our positions, sharing what we're looking at in the markets with full breakdowns, ideas, entries, analysis, etc. Ivan also does coaching webinars, and he offers one-on-one coaching membership as well, mentorship as well. So if that is something that you're interested in, you can also find his YouTube channel by clicking the link that's in the chat right now. So if you go subscribe to Ivan there, you can also find him and ask him about his one-on-one coaching if that's something that you're looking for and you like his commentary. So Ivan, thank you very much for coming on the show, man.
Thank you very much for having me.
All right. And same to you, Frank. Thank you for coming on. And good question about the deflationary concern. Again, bringing it back in to kind of keep it trading focused, right? Like for now, I think that was a good point to make. Like, don't look too far into the future as a trader. So I guess, Frank, we'll see you back on after the next one as well.
Okay, sounds good. Thank you.
All right. Guys, and I think we have news coming here with James in just a moment. But before we do, let me just remind you again, if you have not already, today is the day to get access to our coaching group, our trading signals, or our trading software. If that's something that you're interested in, the reason I say today is today, it's Cyber Monday. And right now, if you message us the word Cyber Monday inside of our direct message link that we're dropping in the chat right now, click this link, send us the word Cyber Monday, and we will get you half off, 50% off anything in our store. That includes our signals, that includes our software, the EDGEFINDER, it includes our MetaTrader indicators and robots, whatever you would like. Send us a direct message. That is today only. We're doing 50% off for Cyber Monday. Take advantage. Click that link. Again, if you've been watching us, this is the last chance of the entire year to get this price before it goes away. So we won't be doing this for a while. So that is Cyber Monday's special offer for our stream fans here. And now we're gonna take a quick break, and I think we're gonna have James join us to do the news. So coming back, we'll have James and I to do the news.
When your trade goes to the moon with 8cap, this is what it feels like.
3, 2, 1.
All right, guys, and we're back with James. How are you, James? Oh, I think you're muted.
Say, sorry, I'm good. How are you?
I'm good, and good to have you back on the show with us. This has been a pretty popular segment for you guys as an audience, and I know James and I enjoy kind of going through this news now. So, James, I'll leave it with you for a few minutes to go through the latest in terms of market-moving stuff. Stick around for a few minutes with James if you want to kind of get your update in terms of market-moving stuff. And James, I'll let you take the floor.
Yeah, sure. Thank you.
All right.
All right, guys. So let's start off with what is happening this week. So we have a lot of big news events that could potentially be market moving this week. So let's talk about a few of them. So today, this is going to be happening later on today in Australia. The Reserve Bank of Australia's Governor, Michelle Bullock, is going to be speaking. And again, I've said this a few times before, but anytime the head of a major central bank is speaking about anything, depending on what they have to say, it could potentially be market moving. And again, that's coming out of the Reserve Bank of Australia. That's happening later today. So tomorrow, for the U.S., we have CB consumer confidence, and in New Zealand, we're getting their monetary policy statement. Now, their interest rates are currently at 5.5%, and it's forecasted to remain unchanged at 5.5%. If that does happen, there may not be much volatility, but if a report comes in that's unexpected, most likely a rate hike rather than a rate cut, you could definitely see a lot of volatility with the New Zealand dollar pairs. Wednesday, we have Euro CPI numbers, as well as U.S. preliminary quarter-over-quarter GDP numbers. And again, another head of a central bank, the Bank of England's Governor, Andrew Bailey, is going to be speaking in a press conference on Wednesday as well. Thursday, we have Canadian monthly GDP numbers, U.S. core PCE price index, as well as unemployment claims. And then rounding out the week on Friday, we have the Canadian unemployment rate and U.S. ISM manufacturing PMI numbers, as well as Fed Chair Jerome Powell. He is going to be speaking as well. That is definitely going to be one to pay attention to, because anything that Jerome Powell says has a big opportunity to cause some big moves in the market. So now, what's the latest for the news? So there's a lot of interesting stuff happening right now over in Gaza, actually. So let's get a quick update on that. So today, Monday, is the fourth and final day of the ceasefire between Hamas and Israel. Over the last 3 days, Hamas has released 58 hostages in exchange for 117 Palestinian prisoners. So basically, over the last 3 days and going into today, Israel and Hamas have ceased the fighting in Gaza, which actually has been very beneficial to aid workers that we'll get into in a second. But part of the conditions is that both sides have to release hostages or prisoners that they have on either side. President Biden says that the U.S. is trying to extend the ceasefire. This is kind of being mediated in Qatar. Qatar is acting as the middleman when getting information passed to both sides and allowing more hostages to be released, allowing more aid to reach the people of Gaza. Both Israel and Hamas have discussed the possibility of keeping the ceasefire, which is good. And in fact, the original ceasefire agreement, so what's happening right now, has a clause that extends it one additional day each day that 10 hostages are released. So, for example, today is the last day of the ceasefire. However, if Hamas decides to release 10 more of the hostages, then the ceasefire will continue on for one additional day so that they can continue discussions on potentially putting some sort of end to all of this. But not all hostages are being held by Hamas. Other groups are occupying the area around Gaza as well. So that is kind of an issue when it comes to extending the ceasefire and getting discussions about how to help all of these people. Some of the good news coming out of the ceasefire, however, is that aid workers acknowledge that it now feels safer in Gaza. The ceasefire has allowed the Palestinian Red Crescent Society and others to aid the sick and injured much more easily. I saw that the Palestinian Red Crescent Society, which I guess is kind of like a crisis aid service that they have over there in the Middle East. They were able to get something like 150 trucks full of workers and supplies and everything that they need to help those who have been affected by the war happening right now. So that's good that they've been able to do that. One person was even quoted saying that they feel like they can walk safely in the streets right now. So that's at least something positive to come out of some of this tragedy. And that's, of course, not the only war going on. I feel like the war in Gaza is kind of overshadowing recently what's been happening in Ukraine, but there's actually a lot happening in Ukraine as well right now. So Russia-Ukraine conflict is still very much in full force. Drone warfare on both sides is being utilized to attack both capital cities right now. Last night, this is Sunday night, Russia claims that Ukraine targeted Moscow with, quote, dozens of drones and proceeded to launch their own counterattack, the largest drone strike since the beginning of the war in 2022. Why am I bringing this up? Because it seems like what many people have, it's almost like recency bias. You get focused on one, what's happening, what's the newest thing happening. You almost forget about the stuff that has been happening for a while now. And the war in Russia and Ukraine is actually only beginning to ramp up right now. Ukraine's alleged drone strike was in response to a different Russian drone strike that happened the day before, where over 60 drones began attacking Kiev, with the air raid lasting 6 hours. The war is nowhere close to a conclusion. Quote, what we have seen is that Russia is willing to put a lot of effort into this war. They're ramping up weapons production, and they're also sacrificing soldiers in large numbers. This is from Jens Stoltenberg. He is the Secretary General of NATO. Again, he says, quote, we need to be prepared for the long haul. Yes, it has a price, but the price of not supporting Ukraine is much higher than the price of supporting Ukraine. So again, that's coming from Jens Stoltenberg, the Secretary General of NATO. So lots of conflict going on over on the other side of the world right now that we hope can get resolved, as quickly as possible. But enough about tragic war news. Let's talk a little bit about markets. So what happens in December? Typically, historically speaking, the US dollar trends lower. And let me show you what I mean by that. If we actually take a look here at the Edge Finder, I'm going to share this with you instead. So we're taking a look at the Edge Finder. This is our seasonality page in the Edge Finder, and you're going to notice a trend here. Right now, we're looking at the Euro USD right now, and this last little block over here is December. We can see the last 10-year average and the last 5-year average. What we're looking at with the seasonality page in the Edge Finder is over the last 10 years, that's our blue bar, and over the last 5 years, that's our red bar. How have these certain assets trended? If you were to average them together, again, over 10 years and over 5 years, you can kind of see, typically, historically speaking, how they trend in the markets each month. So in the month of December, historically speaking, what we're seeing is a rise in Euro USD, which means that, the Euro is trending higher compared to the dollar. And we're seeing the same thing with the pound. Again, 10 years and 5 years, especially 5 years more recently, dollar not trading so well in the month of December. How about the USD JPY? We see the same thing. We see dollar down compared to the yen. How about gold? Gold is usually inverse of the dollar. We see gold trading way higher in the month of December over the last 5 years. How about things like stocks? Typically, people will invest in the dollar or invest in stocks. Again, oftentimes they work inversely from each other. We see stocks up in December compared to the dollar. How about USD CAD? USD CAD, again, kind of 50-50, but really over the last 5 years, trends a little bit lower. It goes on from there. Aussie USD. Again, we see the Aussie dollar up against the dollar. In ZD USD, again, we see it up against the dollar. And finally, USD CHF trading downwards. So December, especially over the last 5 years, has not been very kind to the dollar. So that is something to keep an eye out for. But that's going to do it for me. And I think we're going to wrap up the stream from there. If you guys are interested in that seasonality data, if you're interested in the Edge Finder right now, because it's Cyber Monday, if you message us in, you can get 50% off the Edge Finder, 50% off our trading software, including this information that you just saw. You could get a heads up on things like, how the dollar trades in the month of December, like I just showed you. So really cool, really useful software there. And it's 50% off today only. We are doing a massive sale, but it's only 50% off today when you message us right now. So go ahead, talk to one of our sales reps. When you message in, you're not talking to some random person. You're not talking to a robot or AI or anything like that. You're talking to somebody who's really in our office right now who wants to help get this software to you. So hope you guys enjoyed. Thank you all for watching, and we will see you tomorrow.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.